I would want to start today's video with posing a question. Are you a wealth creator? My question would be, are you a wealth creator, or are you your money manager, your finances manager? What I mean by this is that, are you that person who just ensures this is what I've received, then I will account for, I will do a budget and then account for everything or every spending that I make, and then you keep this money stacked up in a certain account there, just a normal account, just to ensure that you know your money, you have money at any time that you need your money. Yeah, so and also on the other side of a wealth creator, are you that kind of a person who seeks to get a value for your money? Like are you that person who look forward to getting every single coin or every single shilling that you have? Do you look to multiplying it and having something on top of it, rather than just you put it as a 1 shilling and you go and withdraw it as another 1 shilling? Yeah, so who are you in this? Yeah, so welcome to today's video. Thank you for stopping by. If you are new here, my name is Eunice. And if you are a returning subscriber or a viewer, thank you so much for coming. If you've not subscribed, please consider subscribing to this channel so that we can grow financially and we can create wealth together with whatever that we have. Yeah, so a few months ago, sometime last year, I shared on my social media, that was Instagram and Facebook, I shared an SMS that was sent to me by my bank, one of my banks, saying that they're introducing a fee for every account that is held with them. And mind you, this is a salaries account. That means salaries account is earning me nothing. Like, yeah, it's just money. They put my money there. Actually, I'll find my money having, lost value because I maybe every time I go withdraw via ATM, I'm charged a fee. Whether it's withdrawing over the counter, I'm charged a fee. And so when it is said that they are introducing a fee, okay, to some people it might not be seem much because the fee, the amount that they were to charge or they are charging is less than a shilling per day in a year. But look at it this way. You put your money there. You had earned money that was taxed somewhere else. You came and put into this account. And then them who are the custodian of this money, they charge you an amount. Okay, it's understandable. Maybe there are taxes here and there. But remember that this money that you put into those bank accounts, they just don't stay up there. What the bank does is that it trades with your money. It makes your money work somehow else. So let me put this into perspective. When you put your money in the commercial banks are required by the central bank to keep a certain cash reserve ratio. It's called cash reserve ratio. That is, to put a certain percentage of the deposits or the deposits that they've received. They are supposed to put a certain percentage. Please, my camera is going under. Sorry. So they are required to put a certain percentage with the central bank. I think it's around 5.3% around there. So when they put these deposits with the central bank, then the remainder of the money, they are allowed to do whatever they want. See, it's the money from their depositors, the money from their clients. They are allowed to do with whatever they want. So they can go invest your money different places. When people come to borrow loans, they will borrow from your money. They are giving your money, yeah. And remember this. So somebody has come, they've borrowed from the bank. The bank has given them part of your money, which you put there. And the bank will earn interest from this person. And at the end of the day, you are not receiving anything. Yeah, are we getting? So what I'm really talking about is putting money in those accounts that earns you nothing, like especially like something salary account where you just keep, and you find people putting up a lot of money, and at the end of the day, it's not earning them anything. So this is the wisdom that I would want us to get. There are other options where you can keep your money and your money gets to earn you something. So remember that there is something that we call inflation. Inflation means that let me just put it simply, it's where your how money has lost value. And with this is maybe it's affected by increase in prices of commodities here and there. So with this affects your purchasing power. If you bought something at 5 shillings and that money has stayed in the account, if you bought something like last month at 5 shillings, you might end up buying that same thing at 6 shillings or maybe 5 shillings and some 50 cents. Central Bank put the inflation rate, I think, at the month of January at 5.7%. So what this means is that by January, the money that you had put, your money had kind of like lost its purchasing power or its value by 5.7%. So if there's something that you would have bought with a certain amount of money, then that thing would have gone up, or you spend more with 5.7% when you're buying that thing after a month. So you're getting. So if you put your money stacked up in the bank, then what it means is that your money has actually lost value. So it's always wise to put your money somewhere where it's getting you some extra earnings. Yeah. So put your money somewhere where you get some extra earning, maybe into a certain account, a bank account also, that will get you some extra earnings from it. So you find that even the banks, they have different accounts that have different features. So you can have a fixed deposit account. You can that is maybe you're required to save up your money for a certain number of months without withdrawals. So you can also have you can even check with them of what other products that they have that will actually earn your money. So one thing that is always required is just have that checking account where you know that you can have money whenever you need. If you need money for spending or maybe for your recurring expenses every year, it's okay. You can just put that money somewhere where, because most of this where you are going to save this money, you will not be able to access this money every now and then. So ensure you have a checking account where you have that whatever money that you need, that your family requires for spending. Even in most cases, the people keep cash in the house, which for me, I don't find anything wrong with keeping cash in the house, as long as if it's for spending that 1 month or whatever time, and you know very well that you might need this money at any time. So you keep that money, the exact amount of money that you need for a specific time, you can keep it in the house because it will not incur you any other costs. Yeah, so it's okay. So then you can have your emergency savings. Emergency savings, we'll discuss it in another video, but it's separate from, that savings from your normal savings where you think like, I've saved this amount of money, now I need to go and withdraw because something has come up. Not everything is considered emergency. Not everything that can be considered emergency. You can't consider like now you want to buy a certain shoe, you found a shoe somewhere and you consider it, oh, it's emergency, let me go and get it from my emergency funds. No, it's not. That will not be considered as emergency. So we'll discuss maybe emergency funds in another video, but you can have an account for an emergency fund. You can have a checking account. You can have a sinking funds account. All these accounts you can have to just separate your money so that you have your money that you invest and not keeping your money somewhere where your money is actually being deducted and being eaten out, or maybe being, benefiting other people. So we should stop keeping our monies in the bank, just resting there and just saying, oh, I have a certain amount so that you can go somewhere. Because when you have this money in the bank and you have your debit card with you, you just spend this money aimlessly. You go and you're out with the friends and you go and swipe your card. You've gone for shopping, you bought something extra, you go and swipe your card. This is not wisdom. And keeping money in the bank has always encouraged that. Whenever you know that you have this balance in the bank, it has always encouraged those extra spending. Instead, put this money, just have only your checking accounts, funds, the money that you need for your daily spending for a certain period of time. If it's a month, then you keep that separately, and then now that one you can be able to spend from it. Extra money, distribute it, put it into you can put your money to mutual funds. When you put money to mutual funds or to the money markets, you are able to withdraw within 1 working day. And you will not get your money the same way you did. It might not be too much interest that you're gaining, but remember that when you put into mutual funds, in most cases, you're not limited on when to withdraw your money. It's not like, maybe it's different from a fixed deposit account when you're told you keep your money for 6 months, and if you withdraw before then your money will lose some value, or maybe you have to pay some interest if you do withdraw before the maturity time. When you have put your money in some mutual funds, the way you put your money will just earn for you. And then when you just request a withdraw, it will, in most unit managers, they allow you to withdraw. They will send money back into you within 1 working day. So let's get wise. Put your money into where it's growing you, other than putting your money into an account that it's doing nothing for you. And in most cases, if you are like me, you've approached a bank for a loan and you've given all these long lists of what you need, of the requirements before getting these loans, and you've saved with this bank forever. Yes, so approach these banks. Of course, banks are there. They are a financial services provider. They help us. They can help us even to grow our money. But just approach and find out which other accounts do you have that can actually grow my money, rather than just spending from this money. So thank you so much for coming with me.